What's good? This one going to be about really just one easy concept, just understanding liquidity and what liquidity even is, and also what comes with that is liquidity sweeps, right? So liquidity is essentially just where people, traders, right, have pending orders. Pending meaning it has not happened yet, okay? Pending orders means it could be a buy order, it could be a sell order, it could be a stop loss, it could be a take profit, it could be a partial take profit, it could be anything, right? But it's just pending orders, right? Now, market moves for liquidity, right? Why does market move for liquidity? Because market wants to fill these orders, right? We want to fill all these orders that want to be placed, right? We want to fill these stop losses, these take profits, these um, these limit buys, these limit sells, right? We want to take these, we want to fill those draws on liquidity, right? So market can fill more orders in. That's the whole point of the market, right? Also to take more of your money because more orders are in, more chance you lose, right? For the most part, for other people, right? So now, how would you point? So we know what liquidity is now, right? We understand that it's really just where resting order resting orders are at, right? Resting meaning they have not been filled yet, meaning market will move to these draws on liquidity, right? To these resting orders to fill them in, right? To to you know, let's see, if you have a stop loss, to stop you out. If you have a TP there, to take two so you can take profit. If you have a limit buy, so you get filled in for a buy, right? So that's really all um, liquidity is, right? It's just where where resting orders are, where orders have not been filled yet, but that's where the liquidity lies, right? So, perfect example, straight off the bat. This is a strong draw on liquidity, this high, right? Now, why do I say it's a strong draw on liquidity, right? Big wick, fat wick, right? How many people do you think, this would be our market structure shift, right? How many people do you think would want this high to either be taken or broke above for them to either buy or sell? Everyone. This is a strong draw on liquidity, right? This is a strong draw on liquidity. Actually, not a strong draw, but that's a draw on liquidity. This is a draw on liquidity. This is a draw on liquidity. This is draw on liquidity, right? It really happens absolutely everywhere. See, this is a draw on liquidity. This is a draw on liquidity. This is a draw on liquidity, right? But so the main point of draws on liquidity, right, would be obviously where you could place your take profits, right? But it's also really to help you determine your bias, right? So you can see right here. Okay, now it's kind of too late because we're in chop work, right? But if we were up here, I could tell you, boom, we obviously see this is strong draw on liquidity, but we swept it and then we went lower. Perfect liquidity sweep right there. But now we have this high, right? What happens? We sweep this high. Where would you want us to target? Where? The most recent strongest draw on liquidity, which is obviously this candle, this wick, this fat wick. What happens? We smack it. That could have been our take profit, right? We get a liquidity sweep here, bang, target this strong draw on liquidity, right? So now, once again, this is a strong draw on liquidity, but you also need to put things in kind of in a perspective, right? This is really overextended, guys. Like, for us, and we're on the 4 hour here, for us to even get all the way down here, we would need like, because we can't just get like three black Drake candles all the way down here. It's not going to work like that, right? We obviously know that market was going to move like this, right? So, obviously, oh shit, obviously, in the long run, like, at some point, I do believe we will get to this draw on liquidity. But this is so overextended that I just, like, it's not really, it's just in the back of my head, right? for us to hit this, we would need it like a few weeks, like a week, right? I'm in and out in a trade in an hour, bro. Like, the weekly doesn't matter for me. So let's go ahead and point out. So once again, this is a strong draw on liquidity. This is a strong draw on liquidity. This high is a strong draw on liquidity. This high is a strong draw on liquidity. Now we'll get into something else. Another strong draw on liquidity is relative equal highs, right? That's when we have two equal highs that are relatively at the same. It also stands for lows as well, relative equal lows. So right here, we have these relative equal lows. They're basically the same, right? Obviously, we know this is a draw on liquidity, right? And then we have this thing that's right next to it. That's also a draw on liquidity, right? They are literally right next to each other. So this is obviously even stronger draw on liquidity since we have these relative equal lows, right? Obviously, we know that this is a draw on liquidity, and we know this is a draw on liquidity. They're literally relatively at the same spot. So that area, this is a strong draw on liquidity. What happens? We eventually take out this liquidity. So this is a strong draw on liquidity. This high right here, right? Now these relative equal lows, right? This low and this low. Perfect relative lows, right? Relative draw on liquidity. Relative equal lows. What happens? We're right here, right? Bang. Relative equal lows ended up getting taken. Now this becomes our strong draw on liquidity, right? Which obviously takes us a minute, but we do end up smacking that liquidity. Some things I want to talk about is, now this is going to be really hard to find because it's really just based on news candles, right? But news candles, their wicks, right? Obviously, if it's a news candle, that it would have got, like, it's a strong candle somewhere, right? So we'd have a strong wick somewhere. Like, the wick would be pretty fat, right? That's a really, really strong draw on liquidity, right? Because, see, now this is a really strong draw on liquidity. We have 4 relative equal highs. This, and this. These are all called low resistance draws on liquidity, right? Because obviously, low resistance, but they're all relatively the same, and we obviously smack all of them. You could have also said this, like this is all low resistance liquidity, right? Because it's not really the only high, but these are all just low resistance highs. But back to what I was trying to find is news candles. They create these fat wicks, right? And these fat wicks are a really, really strong draw on liquidity because a lot of people are going to have their orders resting at the high or at that low. But yeah, so this would be a liquidity sweep. So what's a liquidity sweep? Bang, we have this high, right? We know that this is a draw on liquidity, right? So let's just say we're somewhere down here, right? We know that this is a draw on liquidity. What happens? We sweep the liquidity, we grab it, right? So these orders that were resting at this draw on liquidity, they got filled because we surpassed this price, right? So these orders got filled. What does that mean? That market now is going to go in the opposite direction. So we grab this strong draw on liquidity. What do? We start going down again. That's essentially what a liquidity sweep is. See another one. You could say this. So this was probably new. Let's see what time it is. If this was at 10, yeah, perfect. This is a 10 a.m. candle. This was probably 10 a.m. news. Bang, strong draw on liquidity. I swear, if I was down here, bro, we have this fair value gap down here. I would have entered off of this invalidated fair value gap, stops at this low, and targeted this draw on liquidity. Because this draw on liquidity is very, very strong. News candle wicks, if they're fat like this, are a really strong draw on liquidity, right? But so what happens though? We come up and we sweep we sweep this draw on liquidity. We sweep this high, this high, and these are all low resistance draws on liquidity, right? They're not really extremely strong, but we sweep all this liquidity with this move up, right? What does that mean? We swept liquidity, market manipulation. Now we're going to go to the downside. What can you target? Low resistance draws as well. So this would be our this and this would be our strongest draws on liquidity, right, to the downside. What would our low resistance be? We could say this would be low resistance liquidity we could have a take profit at, and this one right here. Right, so once we inverse this fair value gap right here, could have entered here, stop loss at the high, because that's why you took the trade. Took the trade off of liquidity sweep. First take profit would have been that draw on liquidity, second that draw on liquidity, third this low resistance draw on liquidity, then this strong resistance will come, and then bang. And you literally would have smacked this 7 RR. Oops. But let's go over and find one more liquidity sweep, and then we'll call it, remember, relative equal lows, bang, right here. This shit not even relative, that shit's on the dot. These relative equal lows, strong draw on liquidity, right? If we were up here, I mean, ideally we would have taken out these relative equal highs, and then you could have taken shorts off that, right? But we did sweep this low resistance, and we did sweep this low resistance. So if you saw like a break of structures or something like that, and you wanted to enter shorts to these relative equal lows, you could, because relative equal lows are a strong draw on liquidity. Let me find one. I mean, this would count, right? So let's say your bias for the day is bullish, right? We have this low resistance internal draw on liquidity, this low resistance internal draw on liquidity. What happens? We sweep both. You could say you wanted to enter off of this invalidation of this fair value gap, because let's say you wanted to take out all this liquidity. You wanted to take out that, and you wanted to take out that, and you wanted to take out that. Well, let's say you only got those two, right? You could have entered off this invalidation of this fair value gap, right? Because that's price telling you that we're not going to go all the way down there. Bang, stop loss at the bottom of the fair value gap. Obviously. Holy, could have caught. And now what do we target? Draws on liquidity, like we talked about. Bang, perfect draw on liquidity right there. It won't let me see anymore, but you could target it. This draw on liquidity. This draw on liquidity would have been my take profit 1 for sure. And bang, right? 3 RR. So right here, you take out this high, you take out this high, right? So we swept this low resistance liquidity right here. You can assume now that we've grabbed these pending orders, we are going to continue lower, right? Which we do. So this would be a strong draw on liquidity, right? This fat wick, this is a strong draw on liquidity, because this is where a lot of people are going to have their pending orders, because it's a fat wick. We come down, we grab this liquidity, we continue higher. That's really all about liquidity. Really useful, like I said, market moves towards liquidity, right? It's just to fill people's orders in. Obviously, market wants as many people to enter as possible. So that's really why market moves towards liquidity and draws on liquidity. I hope all that made sense, especially liquidity sweeps. It's a very good concept. Really help you on the higher time frames as well. Higher time frame liquidity sweeps are really, really good to trade off of. But I think that's about it for liquidity and liquidity sweeps. Remember, strong draws on liquidity are wicks on news candles, relative equal highs, relative equal lows, and know the difference between low resistance and high resistance liquidity, right? Low resistance is just like an internal high or an internal low. So they're not really that strong. They're just low resistance. Price wants to fill it, yes, but they're just low resistance, so price might not. You would want a high resistance draw on liquidity so you know price will go there. But yeah, those are our strongest draws on liquidity, and that's pretty much it. I'll catch y'all boys. Hope that made sense. Remember, if anything didn't, just text me. I got y'all boys. And yeah, that should be it. I'll catch y'all.